Hi everyone, this is a quick video on using the Wolfe wave indicator in conjunction with other timing tools that we provide here at TOSOPTION. So one of the best strategies we have and most loved or hated is our beloved Roku. Okay, we don't care really what the company does. We just want to know if the price action and the way that it's trading on specific days provides a definitive edge where we can position size with respect to the probability of success and the risk and reward. So here's Roku. We have two algorithms running side by side. One's momentum based and one's time based. And today, as of September 16th, which is a Thursday, it triggered a TGIT, which is, thank God it's Thursday, late in the afternoon, so about 90 minutes before the market closed. Looking at the performance of this ticker here, you can see that it's based on its equity curve. Let's take a look at here. It's a winning strategy, but if you get caught on one of these parts where it's pulling back, you may think otherwise, right? So it's a long only strategy, and if you've been longing this most of the time between Thursday and closing it off with profits, managed profits between Thursday and Tuesday, then your equity curve should look like this using common shares. And then if you're using options, obviously it's going to be 5x this because you're using leveraged instruments. So currently it's pulling back, and that's been causing a lot of pain, but we do use certain techniques like maybe the position of the centroid, one of them, to kind of help us not participate in all the TGIT triggers. Okay, so right now when we take a look at Roku on the daily time frame, it was pretty clear, we want to stay out of that trade for a good part of its downtrend. So we go on the daily time frame, and you can see if the Heikin-Ashi candle is red, we've got no chance really we shouldn't be using any sort of strategy that's long when this is red. Basically, we have to shut it down during these periods. So this is probably, we call this maybe off season. And then when it goes green, we can consider taking some of those trades and maybe lose, but you can see if you manage your risk in with respect to just the centroid position, you can reduce the amount of drawdowns that you're going to experience within a strategy. So coming to an end, like here, on average, when companies do go through a correction, they go through at least around a 30 to 50%. So this one here has gone down approximately 36%. That's a lot. And another 50%, another 20, a little bit more down to 50% would take it down to 242, which is definitely possible. Okay, I think there's also a gap there right at 265, and another gap here at 134. Now, is that possible? Yeah, anything's possible for a company to move lower or higher, but here we've taken some early risks, which we've done before, and we see that maybe there's a potential bottom. Going into basic candlestick analysis here, you kind of see maybe possible reversal. This is kind of like a reversal, and we're getting a mini reversal here. Okay, well, aside from these obvious artifacts that can be easily seen in the previous price action, we have this indicator called the Wolfe wave, which is this green lines here representing certain price patterns. And this one's capturing a Wolfe wave on the 78-minute time frame. If you want to learn more about the Wolfe waves, we have all the material in our Discord server. But basically, it provides the trader with optimal entry and projected price targets. The nice thing about this trade is that you can identify your risk and reward upon entry, right? So if it goes enters here, and then you have, say, a holding period of 2 to 3 days, which would be about or a strategy-based time, which would be about 21st. That would be about a 15% move from right here. 10:30, 9:30, 10:30, right there. Ugh. So 14% move to a price point of 363. Okay, so what this means is that anytime from the entry to this time specified date, September 21st, 10:30, which is strategy based, we can see a move of around 14.34%. Okay, now what I want to do to make this clearer is I want to introduce, so this Wolfe wave is not the best looking Wolfe wave. We have some things that we are familiar with, like these squeezes. We have maybe a J hook pattern here. We have algorithms that are along it. So we have some clues that this is a possible reversal, making a move, or dead cat bounce, rip your face off rally to some sort of price level. And then there's a couple of gaps above that. But this Wolfe wave is an opportunity. However, the pattern is a little bit wrecked because usually you want an apex to form, and this apex is actually obtuse rather than acute in formation. When you connect 2 to 4, 1 to 3 together, you see that the two projected rays from 2 to 4, 1 to 3 are diverting away from each other, where they should be converging toward each other, forming an apex. So what that means is that this is not a valid Wolfe wave. However, Wolfe waves are not 100% perfect in itself. So we need to make some adjustments. So a modified version of it would just to be projecting or superimposing our own line to a time specified date using a strategy based back-tested system. And then that would create the price time at which price and time would have to meet. Then I would project the level, a vertical line, to the projected target ray, and that would be my maximum target of that I would not be surprised it to reach before September 21st. Maybe, whoops, I think I did it a little bit. Should be moved up a little here. Okay, and then like that, just to be a little bit more precise, right? So 366. Okay, and then however the price moves randomly between now and here, you kind of have your area of where you are not going to be you're not going to be clenching too much. So this area here is the area that you have to accept when you put position size into this opportunistic trade. And that's basically it. Okay, this Wolfe wave is a very powerful system or indicator that's zero lag. It's available here in our server. Feel free to use it. It's one of the best indicators that I've well, it's not lagging, but it's one of the best indicators that I've used this year. Thank you very much and have a great day.